So in establishing a successful dental practice, one of the first questions we have to ask and answer, what is the appropriate business entity that I'm set up as? Now, quick show of hands. For those of you that are already own your practice, how many of you are set up as a sole proprietorship and file a Schedule C? Okay. Okay, Schedule C filer. What about Subchapter S Corporation? A couple of you. LLC maybe? Good. And PLLC, right? Etc. Okay, so let's talk about the differences. And the question is, these are all the choices you have when it comes to an entity selection. Now, very often I get the question, what is the most appropriate entity choice if I'm going into practice for myself? And of course, the answer is not that simple. It depends on your particular facts and circumstances. So currently, sole proprietorship may be perfect for you, but there'll come a time where one of the other business entities are going to be more helpful from a lot of different perspectives to you. So let's jump into this. So sole proprietorship, basically what this means is that you didn't create a separate legal entity. You're just going out representing yourself as dentist, Mr. Smith the dentist, and you're going out there representing yourself as a dentist with no separate legal entity. Clearly, that's the simplest and easiest way to get your business started. One of the biggest risks associated with that is you have unlimited liability, which means if something goes wrong with your practice, somebody trips and falls and you don't have the right insurance, they're not just going to go after your dental practice, they're going to go after everything you own. The other issue with being a sole proprietorship is that the risk of an IRS audit is dramatically higher as a sole proprietorship. So generally I don't recommend this. If you're in a tight budget, just starting out, you don't have your own brick and mortar dental practice, maybe you're freelancing, the first year or two, if you want to go that route, I won't talk you out of it. But at a minimum, you should really create what's called an LLC, where you could still be treated as a sole proprietorship for tax purposes. The other entity form is called a partnership. In order to have a partnership, what do you think we need? A partner, exactly. So you have to be two or more people to create a partnership. If you're a one-person show, obviously we cannot set you up under a partnership. I do not like partnerships at all when it comes to entity choices. Again, doesn't mean you can't have multiple partners and work together with other people, but don't choose the partnership format. The reason is, if you set yourself up as a general partnership, you have unlimited liability, not just for, you have limited liability as far as the partnership is concerned, but you have unlimited liability as to the acts not only that you perform, but also your partner. So you really want to shield yourself from that liability. The other choice, which is very popular, is creating a corporation. So corporation, you're actually setting up a separate legal entity. It's almost like giving birth but not quite as painful, right? For those of you that are women that have had children. So when you create a corporation, it's a separate legal entity. It's going to have its own social security number, basically an employer identification number, and it's separate and distinct from you. The biggest advantage of creating a corporation is limited liability protection. So again, using a simple example, you set up a practice, you had every terrific intention, you signed a long-term lease, you bought all this equipment, everything looks like it's going to go great. A week into you being there, the city decides they're putting a main sewer line and there's a major sewer project in front of your building and nobody could get access to it, and that goes on for 2 or 3 years. If you end up having to go bankrupt, as far as your dental practice is concerned, as a corporation, as long as you're signing as a corporate shareholder, corporate officer, your liability is limited to whatever you invested into the practice. So limited liability protection is clearly an important thing to do. Furthermore, very often, a lot of dentists, they'll get involved in multiple dental practices, or maybe you have a brother-in-law who's a great chef and he asks you, let's go into partnership. I want to open up a restaurant. Could you be my partner? The premise here is that you want to make sure that every one of your businesses, whatever they may be, are covered through a separate entity. Why? Because if one business fails, you don't want to take down all of your businesses. And the government does this for a reason, because they want to encourage people to go out, invest money, create jobs, be an entrepreneur. So it's terrific that they give you that limited liability protection, but you really do need to take advantage of it. So what's the major drawback of being a corporation? The major drawback is that you're subject to double taxation. Now, if you're like me, I don't like paying tax once. I sure wouldn't be happy about paying taxes twice, both at the corporate level on the same income, and then again when they distribute a dividend to you, again as a dividend distribution. Now, large publicly traded corporations, they have no choice. They have to be a C corporation, a regular corporation, and because of that, they pay corporate tax at the corporate level. Once they pay that tax, whatever profits left after they pay those taxes, that's their profit after taxes. They will then distribute sometimes part of those profits to their shareholders. Those are called dividends, right? You get a 1099 DIV form. Now, guess what? Even though the corporation paid tax on that income already, you, as the investor in that corporation, you're now paying taxes on that again. Yes, at a slightly lower rate, but it's still double taxation. So although I would love to say being a C corporation is a great idea, it isn't for dental practice because of the double taxation. Fortunately, the IRS took this into consideration, and they created a subsection of the corporate tax law, and they basically said you can make what's called a subchapter S election. I would call the S, let's make the S stand for small business corporation. So if you have 100 or fewer shareholders, and with a dental practice you have to be licensed to be a partner or shareholder. I've not come across a dental practice that has over 100 dentist owners in it. Typically, it's one person, two or three, very often two. Sometimes I'll see 3, 4, or 5. So subchapter S is clearly a choice. One of the other things is, as a subchapter S corporation, you cannot have any foreign owners. You have to be a U.S. citizen or resident and licensed in the state that you're doing dentistry in. So for the most part, subchapter S is going to be the entity of choice, but again, maybe not early on in your practice, as we're going to discuss a little bit later. So the big advantage of being a subchapter S corporation, it could significantly reduce your Social Security and Medicare tax. So if you're in an S corporation, you will pay taxes on your W-2. You still have to pay yourself a reasonable salary, but any profit above and beyond what your salary should be, that is not subject to Social Security or Medicare tax. The other big thing is the IRS audit risk for subchapter S corporations is dramatically lower than C corporations. So when we get into the discussion of tax deductions, some deductions are going to be clear as day. You could write them off. Some are going to be clearly not deductible. Then there's that whole gray area in between. So by being a subchapter S corporation, you have a much lower risk of IRS audit. That could put you in a position where you could take advantage of things that otherwise you might not be as comfortable taking care of. The other entity choice is an LLC. And by the way, I forgot to mention to you, with a subchapter S, I'm sure many of you have seen at the end of a dental practice name, PC. The P stands for Professional Corporation, to make the public know that there's limited liability here. Same is true with an LLC. If you're a dentist, you're going to set up an LLC, but it's going to be called a PLLC, Professional Limited Liability Entity. And in order to do that, again, you have to have a dental license in the state you're doing business in, and then you have all of the privileges of limited liability protection. Now, the interesting thing about LLCs is that when you start out in practice, bare minimum, I'm going to recommend you set yourself up as a PLLC. As time goes on, we could convert you to a subchapter S corporation once your income level justifies it. Okay, so that's the short story on entity choices. Before I jump to the next topic, does anybody have any specific questions on entity choices? Okay, we'll go with that. So let's talk about IRS audit risk. So, when you mention names like the FBI, CIA, people normally don't get too nervous, but once you mention IRS, people start to worry a lot, right? For good reasons, because the IRS is basically the arm of the government that they put into place when they want to go after someone. It happens all the time. Even the story of Al Capone, right? Everybody remembers Al Capone, the gangster in Chicago. He wasn't able to get indicted on any of his many crimes, murders, etc., but they did get him on tax evasion. So you got to be very careful when it comes to audits and always follow the rules of the law, and that's what today's lecture is going to be about, is following those rules. So what are the odds of an audit? Well, if you're an individual and your income is over $1 million a year, your odds of an audit are a little over 3 out of 100, still relatively low. As an individual tax filer, if your income is between 200 and $1 million, your odds are 0.6, dramatically lower. As a sole proprietorship, okay, where you're working under your own name, filing a Schedule C, your odds of an audit are dramatically higher for income. If you have income between 200 and $1 million, your odds are 1.4%. Now, the next bullet is really the interesting one. If you're set up as a partnership or an LLC that's a partnership, or you're a subchapter S corporation, those are considered flow-through entities. Your odds of an IRS audit are less than 0.2%. So in theory, making the decision to stay a sole proprietorship increases your odds of an IRS audit by 700%. It's dramatically higher. And the analogy I'd like to make for you is this. When it comes to the IRS, would you rather be a big fish in a small lake, or would you rather be a small fish in the ocean? I think we want to be a small fish in the ocean. So when the IRS is deciding which flow-through entities, which corporations to audit, chances are they're not going to go after an entity that's doing $1 million, $2 million of revenues, but they will go after much larger corporations. So this is an area that the current administration is trying to increase the number of audits for even flow-through entities, but still, as of today, it's still the best choice from a limited liability point of view, as well as limiting your odds of an IRS audit. So, some current news. On August 16th, President Biden signed into law the Inflation Reduction Act, formerly known as the Build Back Better Act. Personally, after reading through that tax law, I think it was inappropriately titled. I think it should have been called the Inflation Acceleration Act, because nothing in that act, from my point of view, is helping to reduce inflation, because number one, it's increasing taxes to businesses. When businesses pay more money in tax, even if it's large corporations, they're going to pass that cost down to the consumers. In addition to that, this act is adding more people as government employees. In fact, they earmarked $80 billion in new revenues to the IRS over the next 10 years, which represents an increase of more than 6 times the IRS's current budget. The IRS is in the process of hiring literally an army of enforcement agents. They're in the process of hiring 87,000 new IRS agents. To me, it's kind of scary, because rather than focusing on customer service, I don't know if anyone has ever tried to contact the IRS about a notice or a question. You can't even get through to them, right? Since COVID, they're all working from home, and it's impossible to get through to them. But instead of increasing customer service, they're investing literally billions and billions of dollars in enforcement efforts. The good news is it's going to take them a couple of years to get there, but it's something none of us have to look forward to. Okay, so the huge target area is going to be flow-through entities. Even though I said it's still the entity of choice, those flow-through entities, I think even with this added revenue, I still think flow-through entities are still going to give you the least likelihood of being audited by the IRS.